We have highly reliable, my best pattern, the HVF method, Hunt volatility funnel setup on silver with a target at 333. And inside of that, we have single digit gold silver ratio. There is so much more to come.
We're in 2026, and there's a lot more interest in silver and a lot more exchanges where people could move to buy real physical silver and gold. COMEX and LBMA, if they keep up with their shenanigans, there'll be history.
The next candle guess is a green one. You know what? It's a pretty good guess. I'll be right probably 7 times out of 10, particularly after a very large red one, which actually is a rarity in what is a bull market trend. We have highly reliable, my best pattern, the HVF method, Hunt volatility funnel setup on silver with a target at 333. And inside of that, we have single digit gold silver ratio. There is so much more to come. And where did this strength come from? Well, we have a divergence in the price. Let's talk fundamentals. You have a divergence in the price between China and between the casino, not so big on delivery market, versus the delivery market in Shanghai. So that tells you one thing. You have a huge amount of JP Morgan covering at $78 near the low. That tells you a whole bunch of stuff as well. So all of these things are happening fundamentally. Do not confuse your fundamental opinions, though, because you might have been fed bad information, with your technicals. The technicals look great. The technicals look great. The hammer is in. This is a buy. The next suspicion of upside is a green candle, or next candle to be, is my guess, an upside green candle for the following week. And even inside this week, this may cease to be a hammer and may start to have a longer body of green. That's right. You're only Tuesday. It's only early. Where would the target be? Well, let's have a look. Let's have a look for you and draw the next target level. By the way, you can see that blue line. I'm sure you know what that is. That is, of course, there's your 85. We do necklines in light blue and solid. There you go. That would be your neckline. And what would you do? You'd do a projection. You'd make sure, go away. There we go. You'd do this from the low up to, that'll be your target once you get going with a bit of speed. By the way, this part from here to here was covered with momentum. So you can understand, again, continuation patterns when you're in the downside. There's many of them on that period during the way down. It sure as hell happened. Again, there's your reversal, shoulder and shoulder. Final neckline, complex head with a W, and there's your other armpit, 1 and 2. So you are in a winding up, calm state for which you've just broken up out of a falling wedge, and you are chill, but getting ready to move further forward. On balance of probabilities, how do we be wrong? The point which we're wrong is the right shoulder, and it can absolutely happen, and we will take losses. It's as simple as that. So you must know the size of your losses. For that, you need a real money management, and you need to have a broker that shows you those losses. It's even better when it shows you on TradingView. I can see and manage all that. The sum of all those losses are how much I'm in for. So overall, we think we're going to pop out the top of this and make our way up to 98, which probably means a technical run back above 100. A technical run back above 100, and then you could be in line for a further head and shoulder maybe. If you run that 100, do 104, do a shoulder. This will all be a new head, one big head, and you could continue to work your way back up on what we refer to as nestled heads and shoulders. Okay, that's quite a lot that I've given you to absorb on gold and silver. The other point I want to make, that I was also making to our premium guys earlier, and the key thing is when you get the news, is you'd made 50 on the downside of, let's go back up, you always start on the macro, you'd made 50 on the downside of the gold-silver ratio. You'd smashed a key level there that we put in there in the dashed blue line. You came all the way back up, and now you're going to dribble your way back down. It may take longer for us to get up that head of steam where it gets to that point just before the last rejection. Remember, we started slow. You got spoiled near the end. It was too good. It was coming too fast. You got a tiny bit spoiled. You may need the gold-silver ratio a couple of times to come down here before you let go and we start making new numbers. That could happen, for example. It's a key level. You're up at 107 over here, and you've been as high as nearly 100 through 128. So this isn't going to happen just because you want it to happen in a hurry again. It takes a while to build up that level of momentum. It has to become obvious again. There's a lot of people that think that's it, that's the top. A lot of people think you're not going to see a new high until 2030 on silver and all sorts of things. Good old Peter Brunt and anybody else. Lots of other people with their views. And it's okay to have views. It's not right or wrong. And for all we know, we'll be proven wrong. But on balance of probabilities, this candle will come back down at least one more time. It might bounce around before it's allowed to go down to 32 and eventually single digits. But single digits is where we will get out.
They've been doing it for decades. They did the same with the Hunt brothers. They always favor the big banks and the big dealers. And do you remember, I think it was Boxing Day, which is December 26th. I think silver was up like 10 cents, more than 10%. And they came out and then they closed the market for like 6 hours. It wasn't even a circuit breaker. And they used this excuse of this data center that there was a glitch or something. But Friday, nothing, right? Was down more than 10%. I saw a headline today on X that one of the Chinese markets, I don't know if it was the Shanghai Gold or Futures Exchange, they used the circuit breakers today to halt because silver went down quite a bit. So they're doing their job. But they will do whatever it takes to help the bankers, because the bankers really are in charge. The COMEX CME, it's now a public company. It used to be owned by the people who traded in the exchange. You could be a partner. You could have gone and bought, a seat on the COMEX, but now it's owned all by the big financial institutions like BlackRock and others. I haven't looked exactly, but they're going to favor. They're going to favor these people, and if they're in trouble, they're gonna play dirty. They played dirty back in 2021 in the first silver squeeze movement. I mean, the head of the CFTC even said, "Oh, we had to tamp down the price of silver." I mean, for the regulator to say that. David Jensen is right. And I think even today they didn't use it. I mean, we were down quite a bit earlier, and I didn't see the market stopping. Maybe it did, but they'll. I think, Jesse, what this shows is that they're really desperate, and but I don't think it's going to work because we're not in 1980 anymore. We're in 2026. And there's a lot more interest in silver and a lot more exchanges where people could move to buy real physical silver and gold. COMEX and LBMA, if they keep up with their shenanigans, there'll be history. I think silver is really on it's a different kind of energy now, silver, after we broke 50. And so I think when silver recovers, it's going to really motor ahead. Not that gold won't either, but I think, when things pick up again, silver will do even better. So, yeah. A lot of people show the long-term charts, or they don't even show charts. They just say, oh, in 1980, it reached that high, in 2011, and then it dropped. But if you look at a really long-term chart of gold, for example, from 1970 till now, and logarithmic because a lot of times they show these like normal charts which don't reflect the price on a percentage basis, and they look really steep. They look like a massive bubble. But I mean, the chart of gold monthly going back to 1970, yes, it's taken off since the beginning of well, actually 2024. And yeah, it's really taken off in 2025 and 6. But if you look at what it did in the 70s, we're not even like we haven't even matched what the price did in the 70s. And I don't discount the fact that we need corrections. I even said about a month or 6 weeks ago, when gold was like taking off, when it broke 43, 4,400, and it was trading around 48, that I thought we could go pretty much nonstop to around 53, 54, and that we could see a correction. And I guess we did. But I think, yeah, the bankers, they used it as an excuse to smack it even more. But yeah, the reason I think it's going to be different this time is that the fundamentals are still there. The debt is still there. The leverage in the financial system is still there. Geopolitically, we just saw China announce this weekend, Xi Jinping, that they really want to push their currency as the major reserve currency. So that's a challenge to the dollar. We're seeing even allies of the United States not very happy with the treatment that President Trump is serving them, right? And they don't want to be also as dependent on the dollar